even with the more
Good morning, everyone. I want to thank you for tuning in. If you're watching, make sure that like button. We're going to watch this live. We're going to debrief this and debunk everything. Good morning, 10:05 a.m. Eastern Standard Time on this Friday, August 25th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I want to thank everybody tuning in to watch this. So let's get into this. I don't know how many people will get in here. Probably not a lot, because not very many people appreciate the actual news. But for anybody who tunes into this, if you're watching this after, please make sure to hit that like button and let's get started. Last year, FYI, stock market dropped 1,000 points when he had his 8-minute speech. So here we go.
The floor is yours.
That was brief.
Let's hear the opening remarks.
In the global economy, 2020.
Okay.
I want to welcome you to the 2023 Jackson Hole Conference, Structural Shifts in the Global Economy. Chair Powell, the floor is yours.
That was brief.
John, Mr. Extra Sour Scream Taco Supreme, Trading with J-Ray, Crypto Scrooge, welcome in, everybody. Make sure to hit that like button. This is going to be very important. I'm doing great.
At last year's Jackson Hole Symposium, I delivered a brief, direct message. My remarks this year will be a bit longer, but the message is the same. It is the Fed's job to bring inflation down to our 2% goal, and we will do so. We have tightened policy significantly over the past year. Although inflation has moved down from its peak, a welcome development, it remains too high. We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down toward our objective.
Dow, S&P, and NASDAQ right there on the corner over here, everybody. I know it's inverted, but just so we can see.
So far.
You're welcome, Albert. Welcome, Driver. Welcome, Ken, Tom, Terry. Good evening. Or good morning. Leon, welcome from the Netherlands. Yes, here comes the BS from Jerome.
Given how far we have come, at upcoming meetings, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook.
There's that data again.
The ongoing episode of high inflation initially emerged from a collision between very strong demand and pandemic-constrained supply. By the time the FOMC raised the policy rate in March 2022, it was clear that bringing down inflation would depend on both the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allowing supply time to catch up. While these two forces are now working together to bring down inflation, the process still has a long way to go, even with the more favorable recent readings. On a 12-month basis, U.S. total or headline PCE inflation peaked at 7% in June 2022 and declined to 3.3%.
Breaking news, Evergrande applies to resume trading on August 28th. Some breaking news here on the bottom.
The effects of Russia's war against Ukraine have been a primary driver of the changes in headline inflation around the world since early 2022. Headline inflation is what households and businesses experience most directly, so this decline is very good news. But food and energy prices are influenced by global factors that remain volatile and can provide a misleading signal of where inflation is headed. And in my remaining comments, I will focus on core PCE inflation, which omits the food and energy components. On a 12-month basis, core PCE inflation peaked at 5.4% in February 2022 and declined gradually to 4.3% in July. The lower monthly readings for core inflation in June and July were welcome. But 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal.
There we go.
We can't yet know the extent to which these lower readings will continue or where underlying
Dow starting to fall
here,
down 50 points since he started.
12-month core inflation is still elevated, and there is substantial further ground to cover to get back to price stability. To understand the factors that will likely drive further progress,
XRP
it is useful to
MCLT, welcome
separately examine the three broad components of core PCE inflation: inflation for goods, for housing services, and for all other services, sometimes referred to as non-housing services. Core goods inflation has fallen sharply, particularly for durable goods, as both tighter monetary policy and the slow unwinding of supply and demand dislocations are bringing it down. The motor vehicle sector provides a good illustration. Earlier in the pandemic, demand for vehicles rose sharply, supported by low interest rates, fiscal transfers, curtailed spending on in-person services, and shifts in preference away from using public transportation and from living in cities.
Thanks, Levi.
But because of a shortage of semiconductors, vehicle supply actually fell. Vehicle prices spiked, and a large pool of pent-up demand emerged. As the pandemic and its effects have waned, production and inventories have grown, and supply has improved. At the same time, higher interest rates have weighed on demand. Interest rates on auto loans have nearly doubled since early last year, and customers report feeling the effect of higher rates on affordability. On net, motor vehicle inflation has declined sharply.
Hugo, we're looking to see if he's going to tighten or if he's going to continue expanding here with the interest rates.
Similar dynamics are playing out for core goods inflation.
I expect
overall.
dovish.
As they do,
he tried
the effects of monetary
hawkish
restraint should show through more fully over time. Core goods prices fell the last 2 months, but on a 12-month basis, core goods inflation remains well above its pre-pandemic level. Sustained progress is needed,
Thanks, Leon.
and restrictive monetary policy is called for to achieve that progress. In the highly interest-sensitive housing sector, the effects of monetary policy became apparent soon after liftoff. Mortgage rates doubled over the course of 2022, causing housing starts and sales to fall and house price growth to plummet. Growth in market rents soon peaked and then steadily declined. Measured housing services inflation lagged these changes, as is typical, but has recently begun to fall. This inflation metric reflects rents paid by all tenants, as well as estimates of the equivalent rents that could be earned from homes that are owner-occupied. Because leases turn over slowly, it takes time for a decline in market rent growth to work its way into the overall inflation measure. The market rent slowdown has only recently begun to show through to that measure. The slowing growth in rents for new leases over roughly the past year can be thought of as in the pipeline and will affect measured housing services inflation over the coming year.
Dow's going up right now. It's up 109 points right now.
Market rent growth settles near pre-pandemic levels.
Dow,
housing services inflation should decline toward its pre-pandemic level as well. And we will continue to watch the market data closely for a signal of the upside and downside risks to housing services inflation. The final category, non-housing services, accounts for over half of the core PCE index, and includes a broad range of services, such as healthcare, food services,
15 minutes, it's
transportation,
picking
and
up a little bit,
accommodations.
absolutely.
12-month inflation in this sector has moved
We're trying to break over the daily
sideways
resistance
since
at
liftoff.
1916.
Inflation measured over the past 3 and 6 months has declined, however, which is encouraging. Part of the reason for the modest decline of non-housing services inflation so far is that many of these services were less affected by global supply chain bottlenecks
It's very
and are
shaky.
generally thought to be less interest-sensitive than other sectors, such as housing or durable goods.
You're fixing it on something.
Production of these services is also relatively labor-intensive, and the labor market remains tight. Given the size of this sector, some further progress here will be essential in restoring price stability. Over time, restrictive monetary policy will help bring aggregate supply and demand back into better balance, reducing inflationary pressures in this key sector. Turning then to the outlook, although further unwinding of pandemic-related distortions should continue to put some downward pressure on inflation,
we don't know. He hasn't given numbers yet.
Play an increasingly important role.
Right now, Dow's liking it though, up 140 points.
Sustainably back down to 2% is expected to require a period of below-trend economic growth, as well as some softening in labor market conditions.
So far, he's sounding awfully
monetary
dovish.
Policy has tightened financial conditions, supporting the expectation
NASDAQ just shot up to 117 points up.
Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are higher as well, by nearly 150 basis points.
What's going on with the dollar?
Behind
Everything's
changes
all of a
in
sudden
interest
higher
rates,
against the
bank lending
dollar.
standards have tightened, and loan growth has slowed sharply.
Yeah, dollar's
Such a
tanking as
tightening
he's
of broad
talking.
financial
Well,
conditions
it's dived
typically
a little bit. I was
contributes to
going
a
to say.
slowing in the growth of economic activity, and there is evidence of that in this cycle as well. For example, growth in industrial production has slowed, and the amount spent on residential investment
We'll
has
see if the
declined
dollar comes and
in
loses
each of the past 5
103.66
quarters.
or not.
But we are attentive to signs that the economy may not be cooling as expected. So far this year, GDP growth has come in.
Yes,
above
hit the like button,
expectations
everybody.
and above
45
its
likes,
longer-run
99 people
trend.
watching. Please like so
And
more
recent
people
readings
can
on
get in
consumer
here.
spending
It's
have been
that simple.
especially robust.
If you want
In
your
addition,
friends in
after
here.
decelerating sharply over the past 18 months, the housing
Andre,
sector
welcome
is showing
in
signs of picking
from
back
Portugal.
up. Additional evidence of persistently above-trend growth could put further progress on inflation at risk and could warrant further tightening. of monetary
XRP's pushing
policy.
52 cents right now.
The rebalancing of the labor market has continued over the past
We're gonna
year,
see
but
here.
remains incomplete. Labor supply has improved, driven by stronger.
Last year we were down
participation
1,000
in labor
points already
aged
during his
25 to
speech.
54,
We're up
and by
175
an
points
increase
already.
in
This is a
immigration
big difference
back
from
toward
last year.
pre-pandemic levels. Indeed, the labor force participation rate of women in their prime working years reached an all-time high in June. Demand for labor
It sounds
is
like he's going to
moderating
raise
as well.
rates. I agree.
Job openings remain high, but are trending lower.
Dude, look at
Payroll
the
job
Dow.
growth has slowed
What's going on
significantly.
here with the NASDAQ?
Total hours worked has been flat over the past 6 months, and the average work week has declined to the lower end of its pre-pandemic range, reflecting a gradual normalization in labor market conditions.
I'd prefer for it to go up so we can hit that
This
4-hour
rebalancing has
rejection.
eased wage pressures. Wage growth across a range of measures continues to slow.
Good morning,
albeit
Marie.
gradually.
10, welcome in. 2
While
million
nominal
tokens
wage
traded
growth
XRP and
must
passing.
ultimately slow to a
Ooh.
rate that is consistent with
Good
2%
morning, Sean.
inflation.
My man from
What
Maine.
matters for households is real wage growth.
XRP is moving.
Even as nominal
MC
wage
Prosperity,
growth has
thank you for the
slowed,
$5
real wage growth has
donation.
been
I greatly
increasing
appreciate
as inflation
that.
has fallen. We expect this labor market rebalancing
You can
to
absolutely
continue.
feel the tension.
Evidence that the
I agree,
tightness
they're
in
gonna
the
keep
labor
raising
market
rates,
is no
but we already
longer
know
easing
this here.
could
We know
also
we're gonna
call
keep
for a
raising
monetary
rates.
policy response.
It's just he's sounding not so hawkish right now.
Turning to the path forward. 2% is and will remain our inflation target.
We will never get back there in our
We are
history.
committed
Just
to
remember
achieving
that.
and
He can say whatever the hell he wants.
sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to that level over time. It is challenging, of course, to know in real time when such a stance has been achieved. There are some challenges that are common to all tightening cycles. For example, real interest rates are now positive and well above mainstream estimates of the
Here we go,
neutral policy
guys.
rate. We see the current stance of policy.
Talked about
as
on the morning
restrictive,
update,
putting
524
downward
was
pressure
next,
on
and we're up there
economic
now. I
activity,
came on
powering
live this
inflation.
morning, so watch that
But
video
we
so
cannot
we can
identify
inform
with
you.
certainty the neutral rate of interest, and thus there is always uncertainty about the precise level of monetary policy restraint.
860,000 right now.
That
in
assessment is
candle.
further complicated by uncertainty about the duration
big
of the
spike.
lags with which monetary tightening affects economic activity and especially inflation. Since the symposium a year ago, the committee has raised the policy rate by 300 basis points, including 100 basis points over
Positivity,
the past 7
Sean.
months.
Yes, sir.
And we have substantially reduced the size of our securities holdings.
Please hit that like
The
button to
wide
get more
range of
people in
estimates of
here.
these lags suggests that there may be significant further drag in the pipeline.
No, Hugo.
Beyond
no,
these
no.
traditional sources
Maybe
of policy
55 to
uncertainty, the
57
supply
cent
and demand
retest.
dislocations unique to this cycle raise further complications through their effects on inflation and labor market dynamics. For example, so far, job openings
Man, the
have declined
S&P
substantially.
the
without
Dow's getting
increasing
ready for a
unemployment.
move up. Look at the
A highly
S&P.
welcome but
The Dow's going to
historically
follow that move.
unusual
I
result that appears to
probably,
reflect
unless the
large
S&P
excess
faked us
demand for
out.
labor. In addition, there is evidence that
NASDAQ
inflation has
following.
become more responsive to labor market tightness than was the case in recent decades. These changing dynamics may or may not persist, and this uncertainty underscores the need for agile policymaking. These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary
If this
policy
is something
too
to be
much
sustained, we have to hold
against the risk of
5188. So
tightening
that
too
should
little.
be our next move. So somebody
Doing
tell
too
me if we
little
hit 518.
could
and
allow
hold.
the above target inflation to become entrenched and ultimately require monetary
This Vicky
policy
right here.
to rein
I know it's
more
inverted,
persistent
but it's
inflation
up
from the economy
153
at a high
points,
cost to
147.
employment. Doing too much could also do unnecessary harm to the economy.
Oops.
As is often the case, we are navigating by the stars under cloudy skies.
Dow's coming
In
back
such
down here.
circumstances, risk management considerations are critical. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide
We could
whether
be
to
crossing
tighten
this
further
pattern up now.
or instead to hold the policy rate constant and await
We need a
further data.
rejection here at around
Restoring price stability
34,240 area.
is essential to achieving both sides of our dual mandate. We will need price stability to achieve a sustained period of strong labor market conditions.
Ooh, that's a
that
W
benefit all.
reversal there in the dollar. Look
And we
out
will
here in
keep at it until
crypto.
the job is done. Thank you.
That's it? That's your speech? He didn't tell us dick. So the dollar puts a W in and XRP puts a bull flag in, it looks like. He didn't tell us anything. Okay, well, that was, I mean, what the fuck, he didn't tell us anything. You didn't miss anything, that was it. I can't believe he said we're beginning. Yeah, it would require close monitoring, but that's what he always says. He always says that. Yeah, he said it's going to take further. He said it's going to take, we need to look at the data, basically. He's talking about 2%, but I mean, wow. That's, wow. I mean, I can't even believe that just ended. What did that just say about Whitmer? That's my state. What did that say about Governor Whitmore? Governor Whitmore activated the state's emergency operations center to respond to flooding in South. Oh, yeah, Detroit's underwater. I forgot to tell everybody that. So I don't know if they're trying to bring in those new cities over here to Michigan, but Detroit is legitimately underwater. There's a few places that are legitimately, somehow our sewers failed in certain areas, failed. And now it's underwater. DXY is at 104.03. I mean, wouldn't Detroit be a good place to stop? Tom, I'm in Oakland County. I did okay. My power only flickered on and off last night, so I'm okay here. I live in a pretty good spot as far as water flow. My house, I don't have a basement, but the way my house is, it's up top higher, so the water drains down. And then, in the back, it doesn't have anywhere to sit. It just drains down to the front. But yeah, as far as my relation to Detroit, I'm about 45 minutes outside of Detroit. 35 to 45 minutes, depending on where you're trying to get to. Not a good area in relation to everything that's going on. Let's put it that way. So 52 cents. XRP we talked about earlier. I mean, I can't believe that just ends. That leaves a lot to be desired for me. I mean, fuck. He didn't say anything. He basically said he's going to keep looking at the notes. Okay. Yep, exactly, Terry. The fact that he's still stuck on the 2%, which that's a pipe dream now. That the only way to do that is to get rid of more and more employment here. And we can see it. A lot of places are closing. A lot of jobs, like the malls around here in the USA are going to be minute. Yeah, John, it was pretty embarrassing. Make sure to hit that like button if you appreciate my work in this live so that more people can get in here. Although now it's over. I mean, what a... I mean, that was a lot to be left desired. It's already over, Julie. And he didn't say anything except the fact that they basically are going to try to get back to 2%, which is never going to happen. And that they need to keep looking at the data. We're going to closely monitor the numbers. I mean, they've been monitoring the numbers since I was a baby. And look where we're at. Yeah, and I mean, the way it ended, it started off with the boom for XRP. But like I said, we need to get a support hit here around 518. That's why I told everybody, let me know when we get to 518. But I didn't know that it was going to end like that. I could have come on and gave a speech like that. He certainly did leave us hanging. And the way he left, there's no follow-up, no media. Last year, the market fell 1,000 points in his 8-minute speech. This year, it was like 10 minutes. And we went from 200 down to 50. Like, see? Even there on Bloomberg are saying this is ridiculous. Let's see. You guys want to see the reaction to this as we watch the XRP play out? Whoops. I wonder if they're going to...
That it's a very complex world out there, and the Fed has to navigate a lot of moving pieces.
Mohammed, one conversation.
So we're just going to hear the mainstream narrative right now while we're still on. If you guys want to continue watching with me, we're going to listen to the narrative right now while XRP tries to retrace to 518. Let me know if it gets there, and then we'll go back to XRP.
And I have had over the last several weeks, the last several months for that matter, people are having this discussion here as well.
Early, which I thought, how prudent is it to bring it down quickly?
Our first math of the morning here, 8:19 a.m. Mountain Time, is 2%, 2.0%.
And we will keep at it until the job is
04 maybe, with a little bit of a euro lift here.
Knee-jerk reaction, Tom, but I would be hesitant to define.
Come out to a 108.04.
Whoops. Let's start this from where they were.
Points later, the goal is still the same. 2% is and will remain our inflation target. The price action off the back of this address in Jackson Hole, Wyoming, shaping up as follows on the S&P 500. Equities elevated, and it stays that way. The S&P up just a little bit on the S&P 500 right now. If we can run through the boards, we get equities up, and then we can get bonds, and we'll do it piece by piece and start with stocks. Stocks are still positive on the S&P 500. Yields look like this, Tom. They're lower by 3 basis points on a 10-year, 420.39.
Dollar comes in. Let's go right to it, John. Euro, a little bit of dollar weakness with the euro 107 earlier.
You're welcome, Shannon.
Come out to a 108.04 maybe, with a little bit of a euro lift here.
Knee-jerk reaction, Tom, but I would be hesitant to
It
define
hit
this
518. All right. That's exactly what we called for. Now, if it holds that, we can continue the rally. If it breaks through there, it was a fake out to the 524 resistance, and that's very bearish.
Not done. And if we need to do more, we'll do more.
This was a Fed chair saying, stop talking about 3% as the new normal for inflation. 2% is what we're going to get down to. We are not going to stop until we get there. The long and variable lags are long, but they are going to come to fruition.
Possible, Mr. Oxter,
tightening that's going to hurt.
Sour Cream Taco
To me,
Supreme.
that is the takeaway. They are not entertaining a 3% target for inflation, despite a lot of people saying that maybe that's what they ought to do.
Perfect Jackson Hole morning, and with the food spread that we've got laid out and support.
I mean, look at these slugs. Who said this is like the American dream? You're right, True. They're talking about their food fucking platter in front of them as most people in America can't even buy fucking proper
It was a
food.
hawkish speech.
Excuse my French, positivity.
Needs to respond.
5177, yeah, now if it comes through and we get rejected at 518, very bearish. 524 was the morning move we talked about. To see if we can get to 55, but
Well, two things.
so far, no cigar.
One, either the market doesn't believe that they're actually hawkish and just
Dow's
thinks they're
down
doing a job
now.
of them.
Dow flipped
And the fact
red.
that he didn't come out and say
The
we're
Dow
gonna
gave
take
back.
it
The Dow
is
gave back
basically
in
an
10
all-clear
minutes
signal.
after Powell ended very
So you can talk about
abruptly.
market reaction.
Gave back the whole
And number
200
two,
point
are
move
they
now.
really convicted to go through
Nasdaq's
this? Yes,
come
they're
down to
gonna go
100
2%, but
points.
if it takes to
S&P's
2035,
come back
doesn't
down to
matter,
almost
right? I mean,
flat.
in other words, how prudent is
okay.
it to bring it down quickly?
Our first math of the morning here, 8:19 a.m. Mountain Time, is 2%, 2.0%, or is it 2.4?
Yep, I know.
1.9 rounded up? I don't know.
It's so true. It's so true, MC Prosperity.
PIMCO saying it's 2 point something, that might be something they tolerate. Tom, at the end of the day, if they're still shooting for 2%, except 2%.
Sounds good,
is out there
Crypto
in
Solo Scrooge.
2025.
Make sure you follow
That's a
Scrooge
shift,
on
isn't it?
YouTube if you're watching for Solo. And the relation with XRP, even covers Corium from time to time.
To come
He's approaching
before we get
that
to
700 subscriber mark. If we can help him
The
out.
matter is, you know, I don't have it in front of me, but in a given set of cities,
Be
in
safe picking up the
Kansas
kids.
or
Here, I'll
Ohio,
drop the kids off.
unemployment rate's under 3%. To me, that's the heart of the matter.
And Mike McKee alongside us to go through this speech. Mike, your first thoughts. What did you think of that?
You're welcome,
There's a hawkish
Crypto
cast to
Scrooge.
it. He didn't say anything he hasn't said before, but basically they.
He didn't have any good
framed it in a
news, did he?
way to
That's
send a
why they're
message to the
talking like
markets
this. Listen to
that
them.
Don't get ahead of yourself and thinking that we're going to halt halt or cut rates. We're going to keep going with what we need to do, depending on the data. And I think he wanted to make it clear that another rate move is still on the table. It may not be for September, it may not be for November, but don't count us out.
They're way more harsh.
as it goes
And they were
forward.
going in
He kept
saying
re-emphasizing that
Jerome
plus
Powell is going to
70%
have
is
a
still long way
longer
away,
than last
and
year's
we're
8
going to
minutes.
go to 2%.
He's going to go
To
deep
your
into the.
point,
They were
John,
telling us before, or at least
Fed
on
has
Bloomberg, I
basically
could hear in the
said, and Powell
background.
said again today,
They were telling us that he was going to have a nice, long, drawn-out
back on
speech,
cutting
basically, to
rates
prepare
until
the
they get to
economy.
2%. But they're going to keep rates higher until they get to 2%. Because, as he pointed out, real rates are up. And real rates will
You're
continue
welcome,
to
Dayona.
rise as inflation falls.
If there's one
So
thing
we
I
might
am, I will be
count
on at all the
down
action spots.
a few basis points to try to keep.
I even did a
the
live
10%
this
about the
morning
same level,
before
but they're
this so
not
that
gonna
everybody could
get rid of
see the
all
morning
their
tactical
tightening
analysis.
until they are convinced they're heading towards 2%.
He started early, which I thought was interesting. He started about 10:02.
John, you notice
I appreciate-
44
how many-
seconds rather than 10:05.
I appreciate the 122 people watching and trying to learn about the economy. XRP at 519, very nice. We need to hold that 518 as it came down. So if we can hold that, we could move up to the 524 for support, and then we'd be firmly looking at that 57 or 54.3 would be the next area.
How much is he uniting all of
Thanks,
the other
Moon, I
members
appreciate
versus
that.
just coming out and saying, "Stop
Yes,
thinking
John,
I'm
that
gonna
is the
say something. I'm going to reconfirm what I've said already and just let it be already."
Well, I think
Renee,
he's
the
basically
elites,
appealing
we're
to
waiting
both
for the
sides here
magic
because
word from
while
Powell.
the
What
speech
was
reads
magic word?
hawkish,
I don't
he didn't
know.
promise any additional rate cuts.
Yeah,
increases.
if the dollar
So
continues
he
to
can
move
go
up,
either
gold's
way
going to take a
after
big
this.
hit
This is more
today.
aimed at the bond
The
market
dollar's
than
up to
it is
104.27.
aimed
Yeah,
at
the
members
dollar's having
of
a
the
pump
committee.
here.
It was interesting, though.
I mean, remember what we talked about? 105 spot 30 was our next major resistance. We're about to have a golden cross in the daily as
He said,
well.
"We don't know what
If we
our
continue
star
this bullish
is, so we're not
momentum.
gonna
So,
talk
I
about
mean,
it." And he said, "We are
gonna be tough.
not going to change
gonna be
our
tough.
2% target."
No new target.
Yeah, so if that's what you're writing about, take it off of your company website.
You know, I love Total Drama Island. I watch an episode every week.
Yes, you
This
do,
is like Total
Prosperity.
Drama Jackson Hole. Forget
The gold silver ratio, remember what I said? They're going to attack that ratio. It was at 85 to 1 4 days ago. Now it's down to 79.4 to 1.
Oh, I think what you would ask him basically is, what is
Yeah, I
it
appreciate that,
is
True. I was
going
only
to
on for
determine
like, what, 20
how
minutes
long
earlier.
we
I just
keep
did the market
rates up?
recap,
We know we're
highlighted
gonna
what was
keep
coming
rates
up on this.
But is it going to be the move in the real rates? And when
Dow's
do you
back in the
expect that
negative
to happen?
now?
Or do you just stay
agree.
with higher rates until you are maybe below 3% into the 2%?
10 years
I'm
up to
curious about one dimension of this speech.
4.27.
He talked about the need for below trend
Silver's
growth
down to
and
24
easing for
bucks
labor
right
market.
now.
We don't have
Totals
below
at
trend growth. When they talk
1.031
about
trillion,
being
down
sufficiently
4.5 billion today, or
restrictive and telling us that they
0.44%.
think they are. What evidence do they have for that?
XRP market
We don't
cap's
have
up
it yet. And
8.4
Powell noted that.
million.
He said it
Up to
looks like growth is
27.446
faster
billion.
than anticipated, and certainly the
XRP's
numbers,
hanging on by a
preliminary
thread at
numbers for the third quarter are telling us
51.86.
that.
So
And I
we'll
think
see if that holds.
feeds back into his assertion that we are not done and we will do what's necessary, because he made a tie between the idea that the economy is moving
Because they're trying
at a
to
faster
gaslight
pace
us into
and the labor
3%
market
as
and the fact that we could see
the
inflation
target, which
develop out of
means
that, which
you would
is
never
something
have
that some of the
2%
other, more
as your
hawkish
interest
members
rates. The lowest you
of
could
the
hope for is
committee have
3%,
suggested that
which
the
means
growth rate is
they have lied
something
to
that
us and they
concerns them.
raised
So he
interest
tied
rates
those
by
two together
50% on the
and
grand scale.
leaves
Just put that in your
the
pipe and
possibility
smoke
of
it if you
higher
actually
rates
consider what
maybe
that
even a little
means.
bit closer than
That means they would have
Might
raised
stay
it.
close. You're going to stick around?
Or actually by about 33%. They would have raised it in one fair
Inside the
swoop.
Federal Reserve,
from 2 to
right here in Jackson Hole,
3%.
Wyoming. That
That's a
interview
big
coming up in
change.
about 30 minutes from now. The perfect guest for reaction to this speech is Mohammed Al-Aaron of Bloomberg
For anybody
and
who
Queen's College, Cambridge.
remembers the
Mohammed, thanks for being
0%
with us
loans,
and being with us through
never
that speech as
happening
well.
again.
What were your thoughts when you heard some of those words from Chairman Powell just moments ago?
I had three takeaways, John. First, it's a speech that said very little that is new.
Oh my God, he's speaking the
He repeated
truth.
what he has said in the
It's a
past,
miracle
and he
they're
has
speaking the
retained maximum policy optionality. Second, he reminded us that with the exception of the inflation target, which he said is 2% and will remain 2%, everything else is uncertain. And his reference to our star in particular was very interesting. And third, what I thought
They have to
was
inflate.
also curious is how he ended the speech.
Yes, he did,
He ended
Jay.
the speech talking about we will follow the stars in a cloudy sky. Everybody sees the cloudy sky, but what's interesting is that the rest of Jackson Hole will be about
Wait a minute. We will follow the stars in a cloudy sky. That was not about the environment. Think about what's happening right now. That was code. We're gonna have to. That's something that we're gonna. That's something that needs to be decoded. I promise you. That has different lingo if you look inside of a different community. And I'm not talking about gematria bullshit. I'm talking about reality.
Stars, all the structural changes that are going on domestically and internationally. And that just adds to the topic that the three of you have been talking, that it's a very complex world out there, and the Fed has to navigate a lot of moving pieces.
Mohammed, one conversation you and I have had over the last several weeks, the last several months for that matter, people are having this discussion here as well.
I'm not saying it doesn't work. I'm just saying the people on YouTube, they are using gematria to trick you. Notice how no matter what they want it to say, it says 9,000 different ways from Sunday. Sometimes we use the English. Sometimes we have to use the Roman English. Sometimes we have to use the ancient Greek gematria. Sometimes we have to use the English 13th to the 14th power gematria. I mean, it's spun in so many ways. Just use the straight, narrow gematria code and don't switch it to your liking. Some base the meaning on different things. You have to keep it universal.
We, from your standpoint, in your opinion, sufficiently restrictive?
I was not born yesterday,
John,
ladies and
this
gentlemen.
goes immediately to what is the right inflation target. If the right inflation target is 2% and they want to get there in a credible period of time, then we are not sufficiently restrictive. If the right inflation target, as you've heard many people say, including Adam
Thank you, Miss
today,
Vicky. I appreciate
is above
that.
2%, given all the structural changes, and the way we're going to get there is not by announcing the new target, but by following a shadow target, and then once we see it stable, adopting it. I think that's the most likely outcome. By the way,
But we're all lucky
Then
in
we
here
are
because we
sufficiently
understand
restrictive.
one thing.
Mohammed, does it concern you that we've heard a lot of people who sound pretty happy, actually, other than Jay
We all
Powell,
believe
who
in
is
Ripple.
taking sort of the adult tone of,
That makes
we're
the
not there yet,
difference.
stop declaring victory, there's a
See?
lot more down the pike.
That's what brought us
Everybody else
together.
sounds like
Despite what everybody
things are going
says, that's
really
how we all
well,
know
and
each
the
other,
Fed
right
policy
there.
is
Without
achieving
that guy,
exactly what it sought to.
you wouldn't even know me.
So I don't think it's
Right.
everybody else, but most people are, especially
Without
in the
that,
marketplace. Not so the economists.
we wouldn't know
you had
each
Larry
other.
Summers, for example, reminding us this morning that if you look at the 70s inflation cycle, this one looks
Colin, it's
very
only
similar.
speculation. They're not going to come
He
out and
has
say they're
two
using
graphs up,
XRP, but put it
and
all
he's sort of
together.
warning implicitly
Every single
that
one
we may
that joined the
see a
BRICS,
pickup in
XRP has
inflation.
CBDC
So I
connections
think
with.
the market.
Why do you think the USA hates Ripple so much? It all looks pretty obvious now. Every one of the BRICS nations use Ripple and XRP as their
Whereas the marketplace thinks that we've got
as
to
their
an
way of
equilibrium,
media, as
and
their
from
new
here,
payments
it's gonna be
that they can
cuts
move
next
money
year. That remains to be seen.
from central banks. It's
Do you
crazy.
think, Mohammed, that it's important for the Fed to get
100%,
ahead of a potential
Christian,
resurgence in
100%.
inflation, or do you think that Jay Powell's approach of
shame
watching the
we have to watch
stars and
the
seeing
cover.
what they are will be sufficient to
Guys, I'm
control
gonna
some sort of
roll one more
embedded
so we can
inflation?
smoke together, some
It's hard to
cannabis,
answer because, as you know,
and we'll watch
they
this
have
play
not,
out.
like past Feds, opted for strategic view of the
Julie
of
said Mohammed
inflation
looks like
law, so
a
they
dope,
have
basically.
a functional monetary policy framework. So they've become highly data dependent.
No, this is where you
which
don't
means
sell
that
XRP.
they are
Accumulation
using
phase.
instruments with
Everybody,
lags
oh, Tom, you know, we
on
could swing trade it.
backward-looking
Go
data.
ahead.
So they are
Be
in a bit
my
of a tough
guest.
situation. They're going to remain data dependent. So I don't think he knows what they will do in September. He's going to wait to see what the jobs report is. He's going to wait for the CPI numbers, and then they're going to decide what to do. But this is the irony: it's a highly dependent, data dependent Fed using instruments that act with a lag.
On radio and television here from Jackson Hole, Mohammed El-Arian with us this morning, and as Dr. El-Arian speaks, John, markets are moving here. I just noticed the rebound in dollar back above DXY at 104, the global Wall Street. That's important.
Break of 108 on the euro as well, Tom, against the dollar right now, about 107.95. Equities elevated through that speech. We're coming back just in the last 10 or 20 minutes.
Yeah.
Plenty of feedback, Tom. This coming from Neil Datta of RenMac, just
Sure,
published in.
please.
Saying the following: I thought Powell delivered a neutral speech. The Fed sees its monetary monetary policy stance is restrictive and will make a more tempered approach to future meetings. Proceed carefully, risk management. These are all catchphrases for do nothing right now. The view from Neil Data just moments ago.
A lot more response coming in here, mixed market, red and green on the screen. Dr. O'Arian, I want to touch upon your iconic working game theory. And that the word that I'm hearing this morning is complexity. I heard it from you, I heard it from John Lipsky and others. The simplicity we're all begging for is T decisions. You are known for this. This is a Jackson Hole devoid of T decisions. How do our viewers and listeners handle the complexity now and to come?
Tom, I think the most important thing to understand is that we have left the world of insufficient demand and we are now in a world of insufficient supply. And there's many reasons for that. It's a world that's not going to go away anytime soon. It's not pandemic issues that are fully reversible quickly. There are longer term issues going on. Change globalization, supply chain management, the functioning of the labor market, and the list goes on. So we are now in a different world.
Yeah, prices don't matter right now.
Side constraints. And
It's not gone yet. No, not yet. Not yet. You're going to have a volatile move down and then get rejected at 518 for it to officially be gone. But if you look at it, it can't compete right now. I keep trying to tell everybody, if the DXY goes unabated here, we're screwed. If this goes up to 105.5, we have further retracement. The DXY, I don't know though.
Because it acts on the demand side.
I don't know. That should not have made the DXY go up.
Dr. Gorgieva with us, and then you and Christine Lagarde with us later. And the
Hey, I appreciate that, Albert.
Are we beyond the supply shocks of this pandemic?
Nope, I'm not in day trading either, but I do cover the charts every day.
Have we escaped COVID?
I mean, we've escaped the worst of COVID, but
DXY was at 102 or 104.25 right
also dealing
now.
with many other legacies. You know, Tom,
Looking a little bearish in the
fascinating that you
3-minute,
will
but it's got to
have
retest
President
that
Lagarde
breakout.
on. Because if you think the U.S. is complicated, then in terms of degrees
Yeah, it's FOMO
of
Fridays
complexity,
today. Remember, we're
Europe
buying
is even
Casper on the
higher.
Daily Live
the UK
tonight.
is even higher than that. So it's going to be really interesting to talk, as you will do, to President Lagarde, because even though she has a single mandate, her environment
Hey,
is
we like to
more
refer to it as
complicated than the
relaxing
Fed's,
around
which is already
here,
complicated.
smoking cannabis.
So, Mohammed, she is so much more exposed. Europe is much more exposed to what's developing in China at the moment. Mohammed, if you took the US out of the equation right now, and we were talking just about Europe and China, would we be talking about
the only
things
person
like
that-
rate cuts and
Big
easing
Jerry
and
speak.
stimulating the economy?
If you take the U.S. out of the
Jerome
equation,
spoke, but,
you would be talking about
he didn't say much.
stagflation. And that's what everybody is afraid of.
He spoke for all of
The
what,
U.S.
12
is
minutes?
exceptional, and it's exceptional in its economic performance. And if you take the
Okay,
US
guys,
away,
I can't
then you're
take
taking away
Bloomberg
the
anymore. Let's
only
see what
engine
anybody
of
else
growth
is
for
trying
this
to
global
say.
economy. But you're not taking away the supply side issues that are causing the inflationary pressures. So if you take the US away, we would be talking about not just the risk of stagflation in Europe, but you would be talking about the risk of stagflation in the global economy.
Mohammed, is that the risk or the reality in Europe right now?
John, is still the risk. Yes,
I guess nobody
Germany
wants to
is
talk about
struggling
it.
the most, and that
I
is,
guess we have to listen to
if you like,
Bloomberg.
the engine for Europe. But there's also good things happening in Europe away from Germany.
Notice, everybody, what did I always say about, even with Trump, I know a lot of you like Trump, and I like Trump, but I don't like politics, because I believe right or left, we're being divided and the central banks run the world. How do I always tell you if you can tell if somebody's part of the actual bigger scale game? Every time something important happens, who ends up being indicted or fingerprinted or another charge like today? We have Jerome Powell's speech at the exact same time Trump's getting his mugshot. So if you don't think this is part of the agenda, we have to keep ourselves open-minded and not kicked in the nuts here. If they're part of the right or left, they're part of the grander picture. It's a distraction.
It's a high risk. It's flashing red, not even yellow. It's flashing red, but it's not yet.
But that doesn't mean I don't like to listen to him
the
talk.
US is much better off. China.
Yeah, they did it last
ironically,
night, but what's the main
most.
story right now?
As you've
They're
been
showing the
discussing all morning,
mugshot.
there
During
is
the entire
all
news
these
session is
policy
all about the
response.
mugshot.
And now these piecemeal responses are being rejected by the marketplace really quickly. The marketplace is no longer embracing the notion
Two-year
that
yield.
China can get itself out of the mess it's find itself
Exactly.
in.
And that's perhaps the cause of the manufacturing recession that we see in
Yep, I'm
Germany and
out.
parts of Europe.
That's my
But
cue
the
too.
services side,
It started
we've been
turning more
talking about how
political, and
that's
I'm
maybe
like,
more directly
eh.
affected by the ECB's policies and where rates are and the more direct transmission mechanism than in the U.S. Jay Powell just said that there is evidence that the long and variable lags are coming
Yeah,
to
we
the
lost
fore
the
and will actually
518.
reduce growth materially in the
Now
U.S.
we got to come
Current
down and
model
then try to get a
for the
rejection
US
at
is headed with
518
respect to
now.
services in the next
Confirm
couple of
that
months or
rejection at
in the next
524 is
year.
not good.
I hope not, Lisa. Our service sector has been stronger, and even though the PMI numbers this week were disappointing, at least they were over 50 for the service sector. We don't want PMIs south of 60 or 50. And also, ironically, the service sector.
If you guys
is where
keep
Europe
talking
has
politics,
stagflation
though,
as
it's
well.
gonna
not the
stop
goods
it in the
sector, it's
corner.
service
Remember what
sector
happened
that's
yesterday?
inflation
How the
source
chat
of
got
inflation
suspended?
problem. So I hope we don't follow Europe, because if we do, then we will be talking about a very different outlook for the U.S.
We're still talking about the potential for some sort of weakness.
Okay,
One
I can't-
thing that,
I can't
Jay
take
Powell's
them
speech
anymore.
did,
So-
seemed to remove.
The DXY looks like, is there any surprise here that it's probably going to come up to the 105 spot 50? I mean, I talked about a long time ago, if we got on top of 103.666, and now it comes up here to 105 spot 30. I mean, there's nothing really in our way. That's the problem. You're welcome, Tom. I couldn't do it anymore. I mean, I wanted to hear what they were saying, but it is mind-numbing to the extreme. And I know it's inverted behind me because you're seeing my face right now in the front of my camera. But this is the Dow, S&P, NASDAQ behind you. The 2-year, the 10-year as well. So, and it's changing now, but the 5-year. But this is your your Dow, S&P, NASDAQ, and the Russell 2000. Oh, show XRP and stuff behind it as well. But with this coming up like this, everybody, look at this. This is a manipulated move. After the BRIC summit, I said they have to have a manipulated move, especially if they brought up currency. They didn't bring up what kind of currency, but they talked about a universal currency for the BRICS. They didn't say what. Gold's going to get hammered from this. Silver's going to get hammered from this. Precious metals, commodities, oil should get hammered from this. Although oil got off to a hot start to try to hold itself firm here. So we'll see. Oil could be the exception to the rule because they're raising gas or the barrel so much. H-bar's tanking right now. I don't even need to look. Where's H-bar? H-bar down 1.69%. About to be in tank mode. Everything is no crypto can sustain the US dollar rate. That's why I'm telling you guys, pay attention to this right now. The US dollar is rising and putting pressure on risk assets. What do you think happens when the dollar crashes finally? This is all added liquidity. I would dare say the whales are stocking up here, especially in most of their cryptos. I'm telling you, this hasn't done anything yet. We got rejected here. So what needed to happen? We need to come to the first of 2 pivot levels to see if we've got any support. 575. That's exactly where we're going to trend down to. Regardless of what Powell says, it all matters. The thing you all need to know is this was manipulated coming into today. Nothing more, nothing less. Look at, is it any coincidence while he was talking, the Dow was up 200 points? He didn't say anything to make this drop 300 points now. He didn't say anything. You heard it just like I did. He didn't say anything. So H-bar, we're going to look at this right now at 575. If it can hold 575, we're fine. We're fine. You're on the 200-day support still, but we have a bearish cross in the 4-hourly. Same thing XRP's dealing with. We're trying not to invalidate the golden cross here in the daily. XRP's trying not to in the weekly. But right now, the market's universally going to start to dive here. We have no choice. No choice. Remember what I'm trying to line up for everybody with our next FOMO Fridays. Sologenic. That's what I've been talking about. We were hoping for it to go under 10 cents. Where the heck is now it deleted Solo off of here? I had a beautiful chart of Solo to show everybody too. Well, I've been showing it. Hopefully this is the right one. They don't have very many Solo charts, so we'll see if I pick the right one. Probably not. Stars and cloudy skies. That's exactly what I stopped. I stopped and I was, we were listening to Bloomberg and we brought that up. There's a Solo in the stock market, which is I used to buy it. It's like an EV thing. Man, which one did I use on here? That's the problem. It's not the crypto one. Maybe I use this one. Oh, so stupid. They put a 20 limit on if you don't want to pay, but I don't want to pay because I want everybody to use it the way I do. Or, if they don't have any money to use it, I want to show it in the free version. Yeah, it definitely wasn't this chart. Yeah, whatever. I'll have to look at the other charts here. Tanya, I'm out. Have a fantastic Friday. I'm breaking out my smoker barbecue and have a fantastic cocktail. I am jealous. I wish I could join you. I am jealous. I've officially became jealous. In a good way. Yeah, Solo. I think FOMO Fridays, the next chapter is Solo. The price came down like I was hoping. Remember, it was up here. When we started, we were debating, and we started with Casper, and I said, hopefully Solo will top out, and I showed everybody it was in a falling channel. I don't know what happened here, why it got taken away. Now it came back to the uptrend and broke it now. But Solo was in what looked like a falling channel here. Something like that on the support. We can just do this real quick. I mean, I got no hurry. I know most people will leave when I cover Solo, but I'm telling you, all this plays in together. And Solo's one I've wanted forever. And it'll help solidarity with Solo Scrooge. And this is not the resistance. I'm just measuring it out. Because you could say Solo has this resistance. I got to measure it properly. It's either I go like that. Yeah, that's how I like it. Because we're using this first area. And then it just comes straight through. So, I mean, you got like this big ass falling channel here. And these are bullish reversals eventually. That's why we're going to have to get on our game at some point with Solo. We have this downtrend that I'm hoping it comes. Shit, we already hit that too. Okay, maybe it's more urgent than I thought. This is the apex meeting point that I thought would have to happen before another breakout. I can't believe it's already down here. I haven't looked at it in like a week. Hold on, let me do this properly. I can't believe it already came down there. Wow. So whoever brought up Solo, thank you. I wasn't going to look at it again because I don't want to get my hopes up when I can't buy it. When it's not in the routine. It's not that I can't buy it, but it's a cycle. So I try not to put too much stock into certain things. I mean, that's coming towards its bullish reversal. And look at this. The beauty of this. That is a massive. Some people message the length of that to get the distance. I mean, that's why sometimes you'll see people when they do technical analysis. I'll just tell you. You ever see how sometimes they'll measure and it'll be like sideways? That's because they're measuring the whole wedge. But honestly, forget that. You can get the length of it basically by measuring the move. It's not going to be much different. So that's why I always say I make it a little shorter. But just a bullish reversal off of here, that's going to get you up into here. That's a massive move. If Solo has a bullish reversal, imagine us buying it down to the bottom of this falling wedge. Nope, not wedge. Falling channel. Imagine you get a quick spike like that. Not saying it's going to happen, because if it breaks down, you're looking at, yeah, oh yeah. Oh yeah, I don't even want to say where it would end up, but you'd be looking at a very, very bad signal. But, so we can put this up here because you'd be targeting that 18, I would say about this 18.3. But that would be the maximum. That would be the maximum. No, solo. They have solo now. In Gematria, stars and cloudy skies were in Jewish. Donald John Trump. Well, that makes sense. Yeah, Miss Vicky. If you're trying to learn about solo as well, Crypto Solo Scrooge, you see him in here all the time, and I know I always promote them. But I like to promote from within, so I always tell people, if you start your own channel, just let me know. Like, we have Corium Concepts, who was part of the community, and I spoke out a few times, and I've said it often, I'll say it again. If you can do something I don't do, and you can put out information about something maybe I don't cover, even if it's XRP and you want to cover it. God knows we need more good people in this community. But let's say you cover something like Scrooge is passionate about solo. Corium Concepts obviously is passionate about Corium. And now Corium Concepts is up about 800 subscribers plus now. Solo Scrooge is approaching 700. And you're talking about two people that were shy when I first met them in this community. And now they branched out because they knew they had information. But with solo, I mean, this has been a long trend. We're trying to break a long trend. And we got rejected. And you can see how it happened. And this is how I had it before. And I told Scrooge when he asked. Once you broke that uptrend, it was bad news. And you created notice how it created the falling channel right below that uptrend. It's almost identical. It's exactly where this first support happened on the channel. Exactly, right where that uptrend ended. So, I mean, if you want to talk about this technical analysis matter, oh, it matters. It matters more than most think. But I came back there on the resistance, as you all know, when we did it in the smaller time frame. I shouldn't have moved it because there was a reason I had it there. Shoot. Because I want this consolidatory area up here where it started. Right on that body, right there. On that candle body. So, once that resistance happened there, we came through that uptrend. Technical analysis is very easy if you make it simple. But you have to know where you're looking. So for me, the range right now is that uptrend up here we got resisted on. And the downtrending support we haven't given way even down here. So we have a very big range, ladies and gentlemen. So that means the range, we have a huge range. And we've been validated with the resistance on a busted uptrend. And been validated on the support that held on a non-broken downtrending support here before a breakout. And it retested it already. So if you want to talk about this range and why I don't like the leverage trade, right now you've got a 52% range. That is massive. That is a massive range. I mean, even on a 2x trade, you're done. So, I mean, that's what you're looking at with solo. That's the best we can do. XRP's tanking now. Which, we knew once it got rejected at 524, if we didn't hold the 518, you gotta find your support now. But I gotta get going here because I gotta do the morning stuff. But don't think XRP's just done. Just because it looks a certain way. Remember, folks, optics. What's going on here in the 30-minute? Let me just teach you optics. Very bearish candle here. Maybe not so fast, my friends. What's going on here in the next 30-minute candle that could invalidate what it's trying to teach us? Can anybody tell me? Something's not right here. You don't usually put it. I'm not going to say it until somebody says it. No, just what candle was that in the 30-minute? Can anybody tell me? Ooh, Bitcoin looks like hell. Yeah, it was a dragonfly right now in the 30. Now, that doesn't mean it won't fall apart. But right now, that is a weird looking structure right there for XRP if I've ever seen it. So if we're gonna hold, we got to play off of this. We can't have a big sell candle here. So it's looking like a dragonfly. The Dragonfly Doji candlestick, what it means. A Dragonfly Doji is a type of candlestick pattern that can signal a potential reversal in price to the downside or upside. Depending on past price action, it's formed when the asset's high open and the close prices are the same. The long lower shadow suggests that there was aggressive selling during the period of the candle, but since the price closed near the open, it shows that buyers were able to absorb the selling and push the price back up. Now, damn, I didn't get to read that. Now it's based on the next candle. If this breaks bearish and you lose this area, it would invalidate our current thought. If you come up and hit resistance and break the 52 cents, you definitely are pushing more in a bullish narrative. Unfortunately, we've got the US dollar beating us down like a hammer and a nail on the wall. So a Dragonfly Doji can occur after a price rise or price decline. The open high and close prices match each other, and the low of the period is significantly lower than the former three. This creates a T shape. The appearance of a Dragonfly Doji after a price advance warns of a potential price decline. A move lower on the next candle provides confirmation. A Dragonfly Doji after a price decline warns the price may rise. That's what we're looking at right here after a bearish few candles. Or bearish candle, I should say. Or we're going to get validation of the move down. If the next candle rises, that provides confirmation. Candlestick traders typically wait for the confirmation candle before acting on the Dragonfly Doji. And this is what I try to teach every day, and it's why I become repetitive. Because it means, you have to wait until the next candle. And right now, this is breaking bearish somewhat unless we hold the 5120. If we break 5120, it's bearish. That's a bearish bias to start this candle. If you hold this and move the other way, see, this is breaking bearish. This is a bad sign. It could just be sometimes you have a breach to fake people out, but this, in the onset here, you're going to want to see a volatile pullback. In the 2-hourly, that's looking pretty bearish. 4-hourly, that's bearish. Daily, man, it leaves a lot to be desired. Because 508 is still the support of the daily candle, so we're still ranging. That's the part that sucks right now. All we've done is ranged. Well, you've got 508 roughly, and then you've also got 49 cents on the uptrend. Our last hope, J-Ride, would be to hold this uptrend on the ascending triangle at 494. Just something doesn't seem right to me. It still doesn't seem right. We still have topside liquidity to be had. Like, how often do you see a deep dive? Just be honest with me. How often do you see a bearish divergence in a time frame like the daily go straight nuke without gaining that liquidity up here? It's almost unheard of. Maybe that's why the daily candle is still signifying more of a top heavy. Maybe these lower time frames are just trying to trick us here. It doesn't make any sense for us not to come up here first to gain that liquidity to come down to the 2020 uptrend. I'm not saying we're bullish. Like I said, it's 54% that we come down to the 2020 uptrend. That means I'm more bearish than bullish. So why do I keep pointing at this move first? Because I still think that liquidity needs to be had. Maybe it won't. Maybe the trading bots just said, you know what? There's not enough money orders up there. And it's not worth it. But it doesn't seem right. I've been around trading a long time, not just in crypto, but in commodities markets, in the stock market, and penny stocks. This just doesn't seem right. Why would anybody buy and sell XRP? The bottom line is, when you buy an asset and you really have hope in it and you have faith in it, whether it's in the markets, if it's in crypto, whether you hold a stock, if you hold a commodity, if you own something, you think it has some kind of further utility or there's something backed behind the company. So to buy it now and just want to swing trade it, it's no different than going in the casino and putting $100 bill in the machine on the slots and, all right, let's see what happens. Someone might walk away with 200 or 500 or 1,000. Most people are going to walk away with 50. Majority will walk away with 0. No, majority will walk away with 50. Some will leave with 0. The majority that walk away with 50, had they have just let it play out because they got rid of their investment, they would have ended up with 1,000 or 500 or 250. But we have that short-term mindset. That's why I'm vehemently against futures trading. Not because I don't think I can do a good job at it, because I know the mental game. I know it's going to take me into a short-term mindset when the game is longer than the short term. Like, look at the daily time frame right here. This is suggesting more top-end pressure right now. But every other time frame is suggesting, besides when you get into the 4-hourly, because 4-hourly still is pretty top-heavy, or is just wicks. The lower ones, I don't know what they're trying to do here, but something's going on here that doesn't make any sense. And some say, oh, technical analysis doesn't matter. Well, if it didn't matter, we couldn't have this active discussion and start learning now, could we? And I'm telling the truth. See, minus 222 on the XRP market cap. That was the sign of the angels as I was speaking. That says I'm telling the truth. I'm on the right track. It's what I've always equated it to, and it's always served me well. What was I going to look at? There was something else I wanted to look at. I don't remember now. I was going to look at something on my phone and I can't remember. Oh, yeah, I remember now. Okay. I was just looking at some of the prices on my phone. So gold right now, and I know I have it up here, but I was looking at something in the reserve. Gold right now looks like it looks like it might come for a further correction here. There's a lot of order books down at around, like I was saying, I think there's people stacked around that 1840 mark. So unless gold somehow broke over 1938, we could have a further correction down. The other level I'm seeing a lot of orders at is around the 1880 mark. So I'm paying attention very closely with that, with the gold, with the COMEX right now. All right. Old Vincenzo. Go watch Vincenzo if you want to see his old breakout video, apparently. So, but that's everything I got, everybody. Make sure if you like what I do, hit that subscribe button. Hit that like button if you appreciate this. Consider joining Tom's Army. If you want to, I would love to see more people in here that are part of Tom's Army paying it forward. I don't do paid promotions, paid advertisements, or paid sponsorships of any kind. I come here every single time there's something to be said. Something in the press conference I was on 3 days in a row for 2 hours plus during the BRICS the last 3 days. You know, so I do like when people start joining the cause. Not just saying join Tom's Army, but just joining the channel as a whole. So be a part of the community. At least hit that subscribe button. I'll be back on at 7:47 p.m. Eastern Standard Time. If you want to see my technical analysis from this morning, which is probably irrelevant now because I just went through this again, you're more than welcome to look at the earlier update, which I don't know if it did all that well because I did a live and then I came right back on. So yeah, it's got 300 views. So I did myself a disservice probably by coming back on, but that's okay. That earlier video was completely invalidated, I suppose. But yeah, I got to talk to some of you in the earlier video. That's what I get for putting it out as a live and not an update. Oh yeah, that's right. It hasn't been posted on Facebook or YouTube yet. So some people might not have seen it unless it was part of the live. I forgot about that. For some reason, it's not uploaded to you. I mean, it shows it on there, but it's not uploaded to library. So thank you, everybody. I appreciate each and every one of you. Have a blessed morning.